Hello everybody, but most importantly, welcome to the Quant holders. We're going to be talking a little bit about Quant, but mostly about market sentiment in this video. We're going to be talking about if we should be buying this pump. Now, with that being said, nothing in this video is financial advice. I am not a financial advisor of any kind, so take everything I say with a grain of salt. So let's get into this video without further ado. Ultimately, what we're going to be looking at here is we're going to take a look at the Bitcoin chart. We're going to ask ourselves, why did this pump? Why is Quant pumping? And then we're going to take a look at some reasons that we maybe should or shouldn't be hopping into this big pump. So let's get started. First question we have to ask ourselves is, why did Bitcoin pump? What is the point? Why did it pump? Why are people buying Bitcoin right now? And why did it go up nearly 25% from this bottom, or over 25%? We're looking at 31% gains. 31% gains just from this bottom wick down here at 16,300. This is absolutely outrageous. This is the craziest thing I've ever seen in a long time since the bull run. And I think that's got a lot of people excited. I think a lot of people are excited about this. And I've actually heard stories of people asking if this is the bull run. Is this the bull run? Are we going back bullish? What's happening? And people are buying in. They're panicking. And that's partially why we continue to pump up 31%. Because obviously we have this FOMO aspect to the real reason it pumped. So one of the fundamental reasons, and we like to do technical trading on this channel, we like to do fundamental trading on this channel, because both are very salient to trading. You can't just be a technical trader. You can't just be a fundamental trader. There is aspects of both. I mean, you could, but you're going to lose out more times than not if you're not both. So why did Bitcoin pump? And before we get into that, I just want to read this off for my Quant holders. Very interesting article here by BBH. If you are not familiar with BBH, it's a 200-year-old financial firm and with about $1 billion market cap. Very renowned firm. And they say this. They say, given the speed and infrastructure investment required for tokenization, its potential is dependent upon collaborating among digital asset ecosystem participants from a technology perspective. The market will need a resilient distributed infrastructure that can support the full lifecycle of a tokenized asset via a cross-border asset agnostic multi-party ecosystem that doesn't necessarily exist at scale today. Such a network would need to enable atomic cross-border settlements of different assets across multiple public and private digital ledgers 24 hours a day, 365 days per year, so all year round, every day, every hour, near instant transaction processing timescales, real-time transparency into price discovery and asset valuation where global standards exist across jurisdictions. An authoritative blockchain that does not require a central operator allows for digital identification and digital signing. Technical and operational interoperability with legacy institutional asset serving platforms. Now you're probably wondering, why do I have these two things highlighted? Well, doesn't this look like exactly what Overledger and Quant can offer? And actually the reason I bring this up is because there actually was an article, which I'm going to go into a little bit later, that updates that that Quant actually talked about. And so we're going to be talking about that in a little bit. They actually bring up BBH. So without further ado, let's get into the price action and what we should be doing about this pump. So first things first, we have to identify why this pump happened in the first place. Well, if you guys have not been living under a rock, you would know that the CPI reports have been pumping time and time and time again. All these green arrows here, and including this red arrow, which was bearish in September, are the CPI report releases. And so if we look back all the way back to July 13th, we can see from this candle, we actually had 25% gains on that CPI report. These are the CPI report release dates. Approximately 10% there. We did lose some here, a significant portion. We actually lost 12% on that CPI release. But statistically, people were noticing that in each CPI report, we got another 4% there. We got another 14% there. We were getting pumps every single time. 6%. And then, of course, then we had the lead up to this very bullish looking CPI report, which brought us down to 6.5% on our CPI report. So we can go take a look at that really quick. As you can see, it was forecasted at 6.5%, and we hit 6.5%. Very bullish. The forecast was 6.5%, which had people front running the actual announcement, the actual CPI report, because the forecast said it was going to be 6.5%. People got excited. They realized this pattern and they front run it. Then when the CPI report actually came, more people bought in when the actual CPI was 6.5. So because this pattern was so salient and so it was repeating itself over and over again, people started to catch on. And what do we get? We get this momentum, this great momentum. And then we had this giant, like I said, even if we go back here, which isn't really too accurate, but 36% in the past little bit here, all the way from November to today, 36%. Crazy price action. Something that was so hard to predict, but an absolutely outrageous call from Noti Crypto, actually within the Alpha World Crypto group. He called a 34.38% gains long on this at 16,575. Now remember that, 16,575, that's when he called it. Then he took half profits at 34%, took another 72% profit from that same long that he didn't take that half on. So he took half 32% or 34%, sorry, and half 72% gains. Absolutely outrageous call by Noti Crypto catching this. And if you look at the chart here, I'm actually going to go small so we can get a better look at the chart. If you take a look, we were, go to my hour, all the way back here when we were trading within this range, that we were stuck in this range for so long, guys. We were stuck in here for so long. We were bouncing around every which way. But we called in here in the Alpha World group, and we called in here in the Alpha World group, and then everybody bought, and sky high we flew. It was amazing. So yeah, congrats to anybody who got in on that trade. Absolutely outrageous. So now we know that it was the CPI reports that was most likely a major contributor to the big bull run that we just had. But the question is now, do we join in? Is it going to go higher? And to answer that, we need to figure out a few things. One, are people going to actively invest in Bitcoin at this very moment? And I want to say probably not. And there's a really good point that was made by Quant in this article here. If we scroll down, it was kind of, in this context, it was more about CBDCs, but it applies here. So this DLT pilot regime, a regulatory sandbox, is being introduced to help facilitate the development of secondary market infrastructure and allow eligible firms to operate a DLT-based trading facility and settlement system for financial instruments. This will give reassurance. This will reassure investors by building further trust in digital fund assets over the coming years. This is really important. So basically what this is saying is currently there is a pilot regime to build a sandbox, a kind of template for things like exchanges, so we can have exchanges that aren't going to FTX, exchanges that aren't going to crash, and people that aren't going to lose all their money. Or we want to, basically the whole point of what this is saying is we need regulation in order for investors to want to invest and to feel secure in investing in this sort of thing, into crypto, into unregulated, what some would consider securities or unregulated crypto, because it's a very dangerous market right now. Nobody wants to go into, you see what happened to Luna, you see what happened to FTX, you see what happened to all Excelsior, all these different places, all these different companies crumbling down to the ground. Everybody sees it. Big investors are seeing it. They don't want to risk their money. They don't want to risk their millions. That's how it goes up. Whales bring the market up. And so ultimately, we are not going to see a bull run, in my opinion, until we get some regulation where people are feeling secure to invest in this. Because right now, everybody is on shaky legs. Nobody likes the market right now. Everybody hates the market right now. And of course, on top of that, if we go in and we look at the interest rates currently, we are at a 4.10%, the highest we've been since around 2007. And the Fed said earlier that they were thinking about raising it this year, 2023, to 5% and holding it there until the end of the year. And so when we see these CPI reports, of course, people are going to get hopeful, think maybe, oh, the Fed, they might not raise rates now because, the CPI reports are good. Well, no, their target is still 2%. Their target is still to get to 2% inflation. And right now we're still over 3 times over their target. Fed's not going to like that. They're still going to pump rates. And so do I think this is the bull run? Personally, I don't. There is market sentiment that we could have a lot of retail buying into Bitcoin, buying into altcoins, but ultimately I don't think there's enough liquidity right now to get us that high. There's not enough interest right now. Everybody's not interested because it's not secure. So currently, would I be stacking Quant up at the top here? Personally, no. But there's a reason that none of this matters. There's a reason that none of this matters. I'm going to let you know, because when we trade, when you trade like a trader, like a proper trader, like a day trader, you're trading the channels. You're trading the ranges. We're not trading just to hold and hope and pray that it's going to go to the moon. We're trading the ranges, and we're going to make things work. We're going to buy, we're going to long when it's bullish, and we're going to short when it's bearish. And we're going to make money when it goes up and when it goes down. Even if it does go to the moon, we're going to be trading those ranges all day. And so when it comes to buying and holding, if you're asking for my opinion, I'm not a financial advisor, I'm not going to give you financial advice, but my opinion is I am personally not going to be buying long and holding at this very moment. However, within the Alpha World group, I'm going to be trading the ranges. That is what I'm going to be doing. And you guys are going to see it in there. So, guys, that is the quick little update to my Quant holders and a little bit of information here. I have a couple more words here for you guys from Andrew Carrier. If you guys are familiar, I know my Quant holders will be familiar. This is kind of interesting. It says the private investment bank Brown Brothers Harriman believes this is best done. This is BBH. Is what I was talking about. This is best done through financial institutions that have a high degree of familiarity and trust with consumers and other institutions who can guarantee the connection between token and real asset. And this specifically, this statement here is about the adoption of CBDCs or stablecoins within enterprise, within banks, etc., and whether or not they're going to adopt cryptocurrency, CBDC tech, DLT tech. They want a high degree of familiarity and trust, so they want a lot of testing to have gone on beforehand and a lot of trust. So whether it's a person like Gilbert Verdian, very well-known, very trusted individual who's worked in government level, international level. And if you guys don't know, Gilbert Verdian is the CEO of Quant. But also a company that's been tested and put through trials and put through challenges and gotten through them and proved themselves through some of the companies and banks that might want to take the riskier approach and take on the CBDC trials in current day. So then the less risk-prone banks will adapt, and the less risk-prone enterprises will adopt the CBDC tech, DLT tech, and incorporate it. So, guys, that is all I'm going to update you on today for Quant. I hope you guys enjoyed that video on this quick market sentiment update and my opinion. If you guys want more information like this, make sure you subscribe. I'll catch you in the next one.